I think because usually the foreign investors are investing from either New York or Hong Kong or Singapore. They don't have access to management. So once again, the qualitative aspect is very difficult for them to get just making a phone call to IR person or looking at the financial statements. So oftentimes they make an investment in companies that look cheap on numbers, but in fact, these companies deserve to be cheap or they're not really cheap, even looking at the in terms of intrinsic value. So number-wise, it looks cheap, but it's cheap forever. That means you won't make it much money. So that's one example.
I know many foreign investors, and they look at the numbers and read something about the company, and they come to Korea and visit the company, and probably that's all. But in many cases, we found out that to really know about the company, you have to just meeting the company maybe is not enough. You have to meet with customers and competitors and just many people around the company. So that's probably the hardest part for foreign investors, I think.
And also because oftentimes we are very Korea focused, but the managers typically invest in Asia are not necessarily Korean specialists. They're more either China or Japan, and Korea gets put in the sort of the other basket, which means that I just don't have time to analyze Korean companies for the amount that they're investing in Korea, and then as we mentioned earlier, not too much information available in English, so they can only buy large companies like Samsung Electronics or Hyundai, and then so they do well when the Kospi does well, but in terms of the absolute return, I can't imagine them finding really small, medium-sized, interesting companies. So it's just it's very difficult for them to have resources to do research and then discover these companies. So it's not so much of a mistake, but it's just inherently they're at a disadvantage, and yeah, so.